Good morning and welcome to the Killik & Co market update. This week there's been a lot of focus on who will be the next chairperson of the Federal Reserve. This is critical for future US policy, so there has been a lot of focus on this. And we are expecting an announcement sometime within the next 2 weeks. So we've been looking at the Betfair odds on the top 3 candidates. First of all, we have Janet Yellen, who's the current chairwoman of the Federal Reserve. During his election campaign, Trump was quite critical of Yellen for keeping interest rates low for too long. But since he was elected, he has been less critical. And I think the reason for that is that a lot of the policies he wants to get through would require borrowing a lot more money, and therefore low interest rates would be good for him. So since he came into power, he has been less critical. But nevertheless, the odds on Yellen getting a second term are 13-2. So she's not the most likely candidate at the moment. Next up, we have Jerome Powell. The odds on him are 15-8. He is Republican, he's a former investment banker, and his views on monetary policies are seen as being quite middle of the road. So if he were to get elected, I don't think he would deviate too far from Yellen's path. And last of all, the most likely candidate is seen as being Kevin Warsh. Odds on him are 5-4. He was on the board of the Federal Reserve during the financial crisis, and he's currently a business advisor to Trump. He has been very critical of the Federal Reserve during the last couple of years, so it is quite likely that he would perhaps shake up the Federal Reserve policy if he were to be elected. So we will be focusing quite closely on that over the next couple of weeks. And over in Europe, the European Central Bank has finally given us some clarity on how they will scale back quantitative easing. At the moment, the bank is purchasing 60 billion euros per month of bonds, and they've just said that that will carry on till the end of this year, and after that it will drop to 30 billion euros per month. That will carry on until at least next September, and possibly even further than that, depending on how much support they think the economy needs. I think these levels of scaling back were pretty much what the market expected, so there's not too much surprise there. But the fact that the quantitative easing could carry on past September next year, that implies that interest rates in Europe will probably stay low until at least 2019. So the implication of that did cause a bit of weakness in the euro this week. And over in Japan, Prime Minister Abe has won a supermajority in a snap election last Sunday. He's seen as being very good for the stock market, so on that news we have seen the Japanese stock market go higher. It's quite interesting to look at a 30-year chart for the Japanese stock market, so have a look at this one here. As you can see, there was a huge crash in Japan at the end of the 1980s. The stock market lost about half its value. After that, the stock market didn't really do a lot for the next decade. Therefore, that's why people talk about Japan's lost decade. But as you can see, the decade really did carry on for much longer than that. So some people do refer to the lost 20 years or the lost score. Prime Minister Abe was elected in 2012, and as you can see since then, the stock market has risen quite significantly. He really has been quite aggressive in his attempts to try and revive the Japanese economy, and his policies regarding the economy have been known as Abe's 3 arrows. So first of all, he's focused quite heavily on monetary easing. He's kept interest rates incredibly low, and he's carried out huge amounts of quantitative easing. Second, he's carried out a lot of fiscal stimulus, so he's borrowed a lot of money and focused on government spending. And thirdly, he's focusing on structural reforms, and this is something that's very much still going ahead. So he's looking at labour reforms within Japan, he's looking at regulatory reforms, and also he's looking at trying to change attitudes within Japan. Japanese companies are seen as being quite cautious. A lot of them are hoarding huge amounts of cash on their balance sheets, so a change in attitudes that would encourage them to perhaps spend some of that cash on expansion, I think that would be very good indeed for the Japanese economy. So now that Abe has won another term, the Japanese stock market has gone higher. If you have a look at this chart here, this just shows the 1-year gain in the Japanese stock market, so a bit more of a close-up. And as you can see, there has been a move higher since Abe won his snap election last week. Moving on to the week ahead, it's still third quarter reporting season, so lots of companies will be releasing results. This week has been particularly good for technology companies, so next week we will be quite interested to see the results for Apple and Facebook, and also next week is quite big for oil. We've got results from both BP and Shell. That's it from us. Have a great weekend, and we'll see you next Friday.